Hi everyone, Megan Marsh here with Lake Erie Mortgage in Erie, Pennsylvania, and today I wanted to talk really briefly about the type of income that borrowers make and how it affects their loan and how they qualify. So the most basic type of income that borrowers will use and quote to us during a pre-approval, and the reason we're also going over this is because sometimes someone will tell us income over the phone, but then when we get their information, it can change. And so the basic type of income that a borrower will have is salaries or hourly. So someone can say they have a $30,000 salary, or someone can say they make $15 an hour, and we need to know specifically how many hours a week that person is working. There's also commissions and bonuses. It's a lot of times with hourly and salary we can use that, but commissions and bonuses are treated differently. You have to have received bonuses and commissions for a full 2 years at that same company in order for us to use it. If you switch jobs and you had commissions at your old job and you switch to a new job and you're receiving commissions at a new job, you can't use it because it's a new company. There is no established amount of commissions, and that's why they look at 2 years of commissions, bonuses, or overtime. You can't use it if you've only been on a job for a year. The other thing is 1099 income. If you are self-employed or you receive income on a 1099, we have to see the tax returns because it is not reported the same way. Deductions can come out of there. Let's see, there's also rental income. Rental income is if you own rental properties and you put it on your Schedule E of your tax return, you may receive $5,000 in rents, but then you're going to have all these expenses that write that amount off, and we can only use the amount that flows into the front page of your tax return, the income that you're actually reporting. And the other thing is what's called, I wanted to go over, unreimbursed business expenses. If you're a W-2 employee, you can be a teacher, you can be a janitor, you can be a doctor receiving a salary. When we get your tax returns, if on those tax returns you or your accountant list under a section of the tax return, it's called unreimbursed business expenses. Let's say you wrote off $5,000 worth of supplies you bought or driving miles that you wrote off. Well, if your salary is $30,000 and you wrote off $5,000, your income now goes down to $25,000. And so those are some of the things we see when we actually get the paperwork in here that can change from your pre-approval. The other thing, and the reason this has come up a lot more recently, is because back 4 or 5 years ago, the banks would just look at the pay stubs. Well, now, since all the regulations have changed, they send to the IRS and ask for all this info. So everything comes out now. Everything is seen, everything that's reported on your tax returns and how much you're making. They don't just look at the pay stubs. So it's important, if you know you have commissions, bonuses, overtime, anything that's a little bit different, just let your loan officer know so that they can accurately calculate what your exact income is. If you have questions, you can email us at info@lakeeriemortgage.com. Or you can give us a call at 923-4203. Thanks and have a great day.